This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 9:05 p.m. on April 26th, 2020. This is the Sunday strategic update on market and stocks and the overall predictive analytics or forecast that we try to do for the coming weeks, if not the coming week. Um, the session will be recorded, uploaded to YouTube for further viewing by all members and free trial subscribers at a later time at their own convenience. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. So like I always do, I am going to cover a couple of broad points. So let me just try to barrage through it, try to keep this reasonably short so people don't get totally bored out of their mind. So we have some solid news over the weekend. We have bottom line is to summarize, a significant amount of global economies are doing partial opening up, which is very important. Coronavirus, at least for now, the curve is starting to flatten globally. Apparently, Spain had very few to no deaths. China at least claimed that they had no deaths in whatsoever for the last 9 days in Wuhan province. Doesn't matter how much you believe it or not. It's still a pretty powerful statement. We have the U.S. economy, quite a few states, 16 states or so, which are going to partially open up. One of some of the hardest hit states, including mine here in New Jersey, right across from New York City. Our states are contemplating opening up partially on May 15th. So that's a very good thing. Hospitalizations are down, and we haven't the number of deaths on a daily basis, which were really staggering just within the past week or two, have started to come down. So thank God for that. We also have we have very Germany's opening up. So that's very, very important. That's the strongest economy in Europe, one of the world's strongest economies. So that's a plus from a global financial perspective. While I'm talking, I'm just going to switch to the e-minis. You can see what we're talking about, why we stayed steadfastly bullish over the past couple of weeks, if not since March 23rd. This is where we are right now, with futures down roughly 5 points. We have a red doji candle, this little cross right here. So follow that as I speak. Other part is Steve Mnuchin, our Treasury Secretary, brilliant gentleman from my neck of the woods here from New York. He said the U.S. economy, which I totally believe, will absolutely explode higher as we open up. It will not, it'll certainly surprise everyone. I've been saying this for a while now. The bad news, the terrible news on job layoffs, you name it. Stephen Hassert, who is economic advisor under President Trump's team, said that it's going to be that we're going to borderline, at least from a numerical perspective, a depression with 16% unemployment rate. Well, I think the markets have, markets are not surprised. I mean, those have been forecasted in. We know that. We see the jobless claims numbers, millions and millions every single week. But at the same time, like they say, at one point, it's the darkest before dawn, and that I believe is the situation, at least with the numerical number. And the market, being a forward discounting mechanism, knows that. And I still believe there is some limited upside, at least from a technical standpoint, that we're going to talk about, which I have propagated and explained on my Twitter feed very, very directly, against the face of many odds, many days when the markets were down 6, 7, 800 points, including Friday. Markets were down close to 100 points at one point, and then turned around and went up 260, close to 300 points. And these are not just my opinions and, I think the market's going to bounce because I want to remain a steadfast bull. This is because I'm truly trying to be as robotic as possible, which I try to do every single day. And I'm looking at the VIX, looking at the technical signals, some of them hidden signals, looking at the overall macro picture as to trader sentiment, investor sentiment, and such, and looking at some of the stocks, powerful New York Stock Exchange stock, for example, Home Depot, one of our most powerful winners, was up and carried the Dow Jones higher. It was up all day. So that was great, made money at the same time. It was a pillar for the markets to move higher. So putting everything together, I was dead right on that. I was also right during the week when things looked very bleak on Tuesday when we had this situation happen. And it certainly looked like that if we were going to break this low, which I had shown from weeks ago, as you guys know, the 2715, 2700 number, 2710 number on the E-minis, approximately the same, give or take a few points on the S&P 500, that if it broke, then we would have a different story, but it didn't. And that's exactly what happened. So from a technical analysis standpoint, especially for newer members who are listening in right now, and thank you, Matt, from Distant Lands, who has introduced a great referral, Dave Crowley, who's joined us today and is listening right now. So welcome, Dave. We really have to be truly robotic in these type of markets. It's been like this for years now, but it's literally like, if you're not really robotic in the way you're looking at the markets, then you're pretty much toast. It's not easy. It is a technical discipline is something doesn't come normally. Human instincts always take over. We know that, but we try to suppress emotions, and the only way you can suppress emotions is by really focusing hard and training yourself in the discipline of looking at structured charts that I put out there, your own gut feelings, your own charts that you put out there. And I think overall it works. Let's put it this way. Not to mention that we're not going to have a few losers here and there, or at least a few losers certain times of the day or certain days, and then they turn around and go nuts, right? So it's just the way it is. So our track record has been very impressive. Anyone wants to understand what our track record is, please feel free to go through the Twitter feed, and you'll certainly see what we're doing, what type of ROI percentages we're delivering, why we are doing setups on certain things which are down on a particular day or 2 days, and why we believe that those will have a significant upside move over the coming weeks or so. So saying all that, what do you call what's her name, Deborah Burks, who's the head of the task force, and I mentioned that, I put it out there. She also mentioned today, and she's a very straightforward lady, doesn't make up any stories or anything. She said that we will expect a dramatic, Burke's expecting a dramatic decrease in coronavirus deaths. That's on my Twitter feed, came out late in the day. This was one of her interviews over the weekend. Dramatic decrease in coronavirus deaths, hospitalizations by the end of May. So if you think about it from a market perspective, end of May, it's pretty much around the corner. And the market being a discounting mechanism, it's giving the juice to the markets to move higher. So I'm not saying that every dip is a BTFD by the effing dip, but as a technical traders, we are seeing, and as we're going to go through the charts right away, we're seeing some very positive patterns and stuff with some limited upside. And if that limited upside breaks up, then we can go a lot higher than what the majority think, because the majority consensus right now from Wall Street down, including individual traders who really don't matter much for the markets because we don't move the markets, hedge funds primarily, they're primarily bearish. There's no question about it. You can see in the numbers, you can see in the cash positioning, you can see in the exposure to equities, they're net bearish. And that is something one has to consider, because that's a very positive contrarian indicator. Because if they have large cash positions, bear with me 1 second. Very thirsty, had some water. So if they have large cash positions, lower than a normal, below average equity positioning as an exposure to stocks, well, what do you think is going to happen as the news becomes less darker and a little bit brighter? They get squeezed, and that's why you get those monster rallies that come from being down 600, 700 points. Is everyone with me so far?
Yeah, you bet.
Okay, sounds good. So the other thing, which is very, very critical, we're going to try to go through that, is we are entering earnings season. So far, 60 to 70% of companies which have delivered earnings so far have beaten the consensus estimate, the lowered consensus estimate, and that's the name of the game. If you beat the lowered consensus estimates and don't give some horrible guidance, or at least there are so many companies which have obviously removed guidance for the second quarter. So the market's not surprised about that. some average person would, oh, well, they removed the guidance, and they're not going to give guidance for the next quarter. Man, things was really bad. We already know that. So there's really nothing new about that, okay? And there have been some few companies which have actually raised guidance. So, and there will be many companies like that which are benefiting tremendously with this massive global technological shift because of this coronavirus pandemic, which are going to benefit tremendously because our lives will, in certain ways, change. Telemedicine, the teledoc type of companies, DocuSign, there's going to be a lot less face-to-face meetings, a lot more. This is where we are. A lot more interaction online, even Zoom going through the roof, and then crashing fast on Friday because Facebook now has launched their own Zoom type of service, which is humongous. Well, that's capitalist competition. So let's see where Zoom settled. But that was a pretty sharp hit on their part. But their business has tripled. They were 100 million users, and they said that, I think last week they said there were 400 million users or 300. I mean, at that rate, they're gonna have 1 billion users. Imagine what kind of revenue windfall that's going to be. So there's a lot of online companies like Wayfair, which has been a huge monster winner for us. Most people don't even know about, or the media never certainly talks about Wayfair. Shopify, you can't even catch that monster. Every day it's up 30 points. It's kind of disgusting because I'd like it to be down 60 points. I can buy it again in a big way like we did when the stock was down in the 300s. Going around $400, 390. I remember. Where's the stock now? 646. How long did it take? 3 weeks? 2 weeks? I mean, think about that for a minute. So all that is going on. Okay, there's Nvidia, there's AMD, companies which are benefiting from this transition to massive chips needed for all kinds of gaming, for artificial intelligence. Cloud companies, some of them will go through the roof. Amazon, forget it. I can't even handle that stock because the premiums are so freaking expensive. It's not even funny. Netflix, Apple, which has an essential commodity in this world that we live in. Think about it. Think about it for a minute. So there we are. So saying all that, there are positive, there are certain negatives. We have a second wave. You never know. Of the virus coming back. You'll certainly have the markets fall a couple of thousand points, without even thinking about it. But hey, we got to live with that. So let's see what happens. So we got big earnings coming up, big catalyst. We also have a Fed meeting coming up, I believe. And I'm going to pull that up on Econoday. This coming week, the Fed's doing a phenomenal job. As you know, they've literally opened up whatever it's like a waterfall of liquidity, right? And it's the Fed meeting is this week. Let me see here, upcoming U.S. economy. We're going to go through that in a second. So without further ado, I'm just checking this for a second. Yep, FOMC meeting announcement Wednesday, April 29th, and the press conference on that. So what's Fed going to say? Oh, we're going to tighten our belt. They're going to be saying we're doing everything. And Chairman Powell, which I've always said one of the greatest Federal Reserve governors of all of them were good, but he's brilliant, especially dealing with this. He said whatever it takes. The spigots are open. So let's deal with the situation now, then deal with what comes later. So that's fantastic stuff. So in the meantime, as traders, we trade. We have heartbreaks, we have joys, and in between, we try to stay calm. So let me start off by reviewing some of the charts. It's always a very good reminder to look at the big picture and then zoom down to the localized short-term charts. So let's start off with the monthly. Very, very important. These charts are very easy to understand, but very important to keep that mental perspective. Are we in a bear market? Are we in a bull market? Let's say that we are neither in a bear market or a bull market. I know we're in a bull market, but let's say over a long-term bull market and a short-term massive reflex bounce. So let's say, for example, let's try to train our minds to think, okay, forget about whether it's a bull or bear market. Let's just look at the market, where we are, and try to basically manage our positions, take profits as needed, and keep keep a tactical bias. Let's just put it this way, with a cautious eye, but a bullish bias. Let's just put it this way. I think that's the best way to put it. So you look at the longer term picture of the monthly chart going back to 2007. That's 13 years ago, long time ago. 2009. They call it the second Great Depression, housing market collapse, and this is where we are. So it's still a bull market if you look at it. Long tail hammer, blah blah blah. The worm is turning. Look at that. This is where the worm is turning. All right. You got the stochastics, the full stochastics. These are monthly. Each candle is 1 month, as you know. This is pretty serious. It is still crossing over. It looks very, very similar to December of 2018, when on December 24th, you know by now, said it probably a zillion times, that was known as the Christmas Eve massacre. Day before Christmas, the markets were down 630 or 640 points. Never happened before. So since then, the market rallied higher, had a nice correction in May, on the month of May, and then continued to move higher. Then we had this massive pullback, coronavirus, and then the oil crisis, which was initiated by the Saudis and the Russians, and oil is starting to stabilize, which is a good thing, from very low numbers. So first week, I'll take this as the first week. Week 1, week 2, week 3, massive. Looked like we're going to break the back of this 13-year, or not 13 years, it started in 2009, 11-year bull. We got there, we broke it. We went below 2200, went to 2170 or 2180, 2174 actually. But guess what happened? I was there, stood by it. I told you this was going to happen. There was going to be a reflex bounce. Whether the reflex bounce holds or not, we shall see on a monthly basis. But this is the big picture. So while the Goldman Sachs guys and the JP Morgan guys and the who knows whoever guys, in your other trading forums, all the pundits on TV, on the financial news networks, they were like, okay, it's all over, blah blah blah. We're going to 1800. How many times did you hear that? You heard that a lot. And this is after a 4,000 point plus drop. Well, guess what? Didn't happen. It went switched back into the long-term 11-year bull market that we're going through, and the channel held, and this is where we are right now. So net, it certainly looks bullish. The internals are certainly cooperating, and if this is going to be a repeat of what happened here, which is very possible for reasons I spoke at the beginning of the call of this webinar, and if it follows that trajectory, this will be this crossover is just developing on the stows, and if it follows this pattern, then we're going to have a multi-month rally, and that multi-month rally could bring us up, who knows, towards the high. I won't even go that far. My charts are telling me that we have the 29.89 level as a major resistance, because this is actually a box. Here, let me get a pen. Are you guys with me so far?
Yeah.
Okay. I'll try to keep this real simple. Simplicity through advanced technical charting is the essence of success. There's your box. Perfect. Upper end of the box is around 29.75. Lower end of the box was 2300. Right there. We are here. We can get to the upper end of the box, in my opinion. We can get there by this week, end of the month, if there's a rush of portfolio window dressing where fund managers, especially mutual fund managers and hedge fund managers, primarily mutual fund managers, which are the 800-pound gorilla in the market. Mutual funds are the largest component of the US stock markets, and of course the pension funds, but the mutual fund complex is the biggest one. When they start window dressing, which some of you might know, they start buying stocks that they're not in just to show that they actually owned it. It's borderline illegal, but it's been going on for ages. Okay, they just want to buy those stocks right at the end of the month so they can show when those quarterly reports go out to all their millions of clients. It shows, hey, I own Zoom. They won't tell you exactly what day they bought it. They could have bought it on the last day of the quarter, but it shows it. The quarterly reports, the customers looking at, they're like, wow, they owned all the good stocks. They own Wayfair, they own Amazon, and they owned Anthem, and they owned like this or that. They own Teladoc and all the great stock that we have owned for a while and traded. So that's called window dressing. It's a portfolio markup mechanism where they're marking up their portfolios. In other words, they are increasing alpha. Alpha is basically excess returns by buying high beta, by adding beta stocks, high beta stocks. High beta simply means high momentum stocks, which have, which are performing the best in the market. Okay, so that's called window dressing. You window dress your house just so your house looks nice, even though inside it might be a mess. All right, so the window dressing is something that occurs in the last couple of days, a month. It has already started, in my opinion, and we have a couple more days left till the 30th, and the 30th is Thursday, so that will be the end of April. So we could get a nice little, pop. Not every single day, but just giving you the overall idea. So this is what I'm looking at. Now, if we break the box, we're going to head towards that 3,200 level. And of course, this was the top in the market, the 3,400 level, which we had projected, and we were dead right way back. You guys remember that? All right. We were supposed to, if we didn't have coronavirus, we'd be sitting at 3,600 right now, upper end of the channel, where there would be some massive resistance. That's just standard procedure. But coronavirus came, the oil stuff happened in a huge way, and the crisis, and everything just fell apart, and the world changed, and we're still here. So that's the longer term picture. The worm is still turning. It's all good. This is the most recent, going back to 2018. This is the most recent pattern symmetry that I can detect. In fact, this is the closest pattern symmetry that I can detect. If you look at the structural candlestick patterns and the overall pattern, so that basically it is this particular set of internals, which looks very similar. Do you guys see what I see?
Yeah.
Exactly. Somebody said, hey, somebody says, hey, why don't you look at that? Because sure, I can always say, hey, we got down to the bottom of the stoves, severely oversold. I was going to say undersold, oversold, and we went from there. But it doesn't look like the same pattern as these two. So sometimes you don't need to know anything about the markets. A lot of these algo coding guys, they don't know anything about the market. They look at a lot of stuff with numerical movements, momentum movements, indicators, everything, and they just write the code. But so even here, you don't need to know that much about the market. Look at this chart, look at the pattern symmetry. If it works out, which is only has been working out since March 23rd, since we bottomed, then we can hit the upper end of the run, which is a good solid another 100 points, 150 points times 8, another 1,000 points on the Dow. Can we make that happen? I think so. And in between, there's going to be a lot of intraday volatility. So let's move on to the next one. So that's your longer term picture. And it certainly is bullish. No question about it. Let me clean this out. Let's take a look at, let's move on to the second stage, zooming in a little bit more, the weekly chart. And I keep on reminding all of you, start looking at the market in a very mechanical fashion. These structured charts can make you a lot of money. Of course, we have to follow prices because that's what it's all about. But you want to know the directional bias of the market, whether you should always fold, whether it's going to be back to bear market and all that garbage that you hear out there. The technicals are not showing that whatsoever. Unless we breach certain levels and the pattern and the technical patterns and the picture changes. It hasn't. So that's why I say when people enter my service, it'll take them a little while. Some people catch on real fast that you will never look at the US financial markets or any financial market, but we specialize in the US financial markets the same way like you ever did in your life. So this is part of your transition. So forget the internals. Let's look at this. Look at this candlestick structure. This is where we bottom. This is certainly, from a trading perspective, bullish. No question about it. And this goes back to the 2018, beginning of 2018. This is what we're looking at. This is a weekly chart. Let's try to zoom in more as to what now we're seeing it. Nice, lovely colors, bright. So this is where we were. We were breaking down on last week, and we created this massive long tail hammer, very similar to this. The body of this net weekly red, or last week closing Friday, is still within the body of this bullish engulfing rocket, the hammer reversal. Look, a little firecracker. Longer the tail, the better. The tail is basically such. This is telling you that there was some massive buying, whether it be through short squeezes, which is the same thing as buying. Shorts have to cover, i.e., buy back what they shorted. Many shorts got burned because they were shorting the market down here. So whichever the case, the wick of the candle is telling you the longer it is, the better it is, because they got jammed. They got jammed, okay? So that's very good. So keep in mind as you're learning more technical stuff. Longer the tail, the better off the kinetic energy for this little fireworks, this whatever you call this one. Well, in the technical terms, that's a reversal hammer to bust a move over 2878, where we hit some resistance right there. All right. So this is building up the kinetic energy needed to boost the next to basically, I always compare it to a rocket, that goes up. The booster rockets fall off as and the booster rockets are needed to provide us and propel the rocket with that extra energy and power needed to escape, to get into escape velocity, to do what? To overcome Earth's gravitational force and get into orbit. Okay, so it's the same thing when you look at it from a physics standpoint. When you look at candlesticks, the longer the wick, I mean, you're picking up some serious kinetic energy here. These are the booster rockets that are going to basically take us up towards this level, which I think we're going to get into 2915, was last supply zone, i.e. this is where the big selling came in back on March 9th. And we can move to some higher levels here. We can get towards the middle. This line here is the mid Bollinger, and that mid Bollinger is 3015. I think we can get there. I think we could get there. Now, all that will be completely negated if we, and last week we escaped that negative, the gravitational pull of the bears or the market is negated if we break below 2716 or 2700, in which case we're going to basically come down towards 2600 and then attempt another bounce. So that's not out of the picture, but we are looking at the probability of what is happening. Now, in order to understand the probability of this upside move, and I'm not saying that that's that big an upside move, maximum 600 to 1,000 points. And we're going to hit a big rock wall right here around 2920, S&P 500. That's about 500 points from here. Okay? So basically, how do we measure for newer members, I'm asking this question, how do we measure the probability? This structure looks very good. Okay, we're good with that. How do we measure the probability of whether or not this is about to happen? Like, how would you know? I mean, how would you say, okay, there's a good chance that that's going to happen. It's a higher probability. Let's say it's a 60 to 70% probability we're going to have that upside move versus we're going to basically come crashing down. So how do we, what do we look at in order to derive that, to derive the probabilities of that happening? Can anyone answer me that? Some new people. Come on, guys.
The volume.
That's boring. Okay, next, go ahead. Volume doesn't mean anything. It does mean something. No, that's not the answer. What is missing on this chart?
The oscillator.
Exactly, the internals, whether it be the oscillator, whether it be the MACD, whether it be any other internals that you're looking at, the MACD, the stochastics, the New York Stock Exchange oscillator. We have to look at the internals. The internals will give us an idea whether there's a probability of this market moving higher or lower. Exactly. All right, so get with it, guys. By now, you guys should know that very, very well, especially anybody who's been in my service for more than a couple of weeks. I'm always showing what's happening underneath the surface, because just looking at the externals is not going to give you the chance or the probability what's going to happen higher. All right, so just keep that in mind. Thank you for that answer. Who answered that anyway?
Zach.
Good job, Zach. So did everyone hear what he said?
Yep.
Exactly. Yes. Very good, very good. So bottom line is that this is looking really good. Why? Let me just send, you guys can see it too, and I explain it. Look at the MACD. Deep dive into the minus 100 range, unheard of, never happened in the US. I don't know like when it happened, okay? Obviously nothing like this happened too that fast. So now the MACD, which is a green shaded area, I'm just showing it in area form, not in histograms, is now about to go positive. There's the zero line, the baseline. It normally goes above zero, possibly like, you know, plus 20, whatever, but it goes green. I mean, this is actually shaded red. I can't change the color on investing.com, but it's actually meant to be red. You guys can understand that. So once it crosses over zero, it becomes green. And I believe that over the next 1 to 2 weeks, we are going to go green. Okay? And that's when this oscillator, which has been nicely turning, will hopefully get into massive overbought levels, which means we are going to be attacking that mid 2900, 3000 levels on the S&P 500 and the E-minis. It's really as simple as that. And this is your uptrend channel, which was drawn a while ago. You guys know that. And we will attempt to enter it. And in my opinion, we will fail. Okay? We will fail unless something changes on the coronavirus vaccine side, in which case there's going to be a rally, another set of rally, which is going to just crack the heads of the dogmatic bears and shorts who keep on shorting the market. But I'm not going that far. So here is your acceleration channel. There's big green lines. That happens to be around 3034. So is it possible that we can make a moonshot towards there and try to enter into this acceleration channel? That's where I'm saying that I think there will be the first failure between the mid Bollinger, which is at 3014 or so, 3011, this blue line. This is called predictive analytics. And I can assure you that given my track record, I'm going to be pretty much dead right. If I'm wrong, fine, then I'll adjust my opinion. But this is how you play the game. Predictive analytics in extreme volatility that we go through is such a difficult game, but I'm going to do it because that's what I love to do, a challenge. And the more I do it, it's like it kind of let's put it this way: no one gets perfect at this game, but it just becomes fluid, and your confidence level grows. Okay, so that's what we're looking at. This worm is turning; it should go positive, and this blue line here, one of the MACD lines, I believe that's the MACD 2012. Not sure. Don't worry about the numericals. I like to keep it simple here. If this starts to turn and cross over the red line, let me get this thing here. If this happens and it crosses over the red line, which always lags below the blue, and it does this, God help the shorts. Okay? It's going to be a disaster. It'll be so fast, so furious, and the most beaten down sectors ever. What are the most beaten down sectors right now? Which are that's not Amazon and Netflix. Those things are zooming. They're acting like nothing happened. What are the most beaten down sectors? Some long-term setups that we have positions in.
So financials and small caps.
We have no positions in financials right now, but they are beaten down. Small caps, that's not the answer. What stocks do we have some positions in? Can somebody tell me which are some of the most beaten down sectors, which have very large potential?
Home builders, Toll Brothers.
Thank you. I picked Toll Brothers. You can pick, all the Havnani and anything. Yes, exactly. Home builders. We have certain times we have limited positions, and the best way to play the energy rebound is EOG, Enron EOG. You can buy the USO. Nino does that. You can buy any other thing but the USO is a weird ETF. I wouldn't even go there. They're having a reverse split and all that stuff. It's all different stuff. I go with EOG, clean pipeline play, one of the best companies. That's the old Enron oil and gas, EOG. and amazing company, great options move, perfect way to play. So oil and gas, the home builders, and you're missing one other that we're
Boeing?
down on right now. What?
Boeing?
I couldn't hear you.
Boeing?
Sure, Boeing. What sector is the Boeing sector in?
Airline.
Thank you.
Airline.
Airlines. So on airlines, I've been pushing, I mean, one of my favorites, United Airlines, or you can buy, any one of them. You can buy Delta Airlines, whatever. So UL. So those sectors, when the economy is partially opening up, you don't think those things are going to fly? They're going to fly so fast, your heads are going to spin. You won't be even there. So if you don't set up when the prices are this dirt cheap, and I've showed this repeatedly, those charts, then when are you going to buy it? When it's at $30, $35? So let's not be stupid, okay? Buy these things, buy the calls months out, maybe a month out, 2 months out, 3 months out. Airlines are going to fly again. They're going to make adjustments. What, people are not going to fly anymore? Yeah, not to those levels they did before, but what, airlines are all going to be grounded? We're all going to be walking to our vacation spots? Like, oh, I want to go visit Switzerland. I want to go visit Dubai. I want to go visit somewhere in Mexico. Yeah, let's just take a bus there. Like, come on, let's not be stupid, okay? Airline capacity is going to pick up. Airline travel is going to pick up, and the stocks are dirt cheap. So those are the things which will turn things like that, and this will get severely overbought, and who knows, by early summer, which is around the corner. All right, real simple. Just understand that. No one's talking about, oh, we're going to go back to 3,400. Every time you see the different trading forum, whether it's StockTwits, any other forum, they're always talking about all or none. Like, these guys are supposed to be really smart traders. I put up a single chart, here and there. My friend Paul here sometimes puts some of my charts he likes, and then I get I get thrown into a thread with people commenting on this and that. I don't even respond to them. What am I going to say? Like, these guys are all like, either like, okay, the world's ending tomorrow, I'm going to put a gun to my head and blow it off, or I just won the lottery. Like, why not in the middle? Like, isn't that what life is all about? So that's why the market is manic depressive. Most traders, by listening to what they're saying, here's timber, here's like going down another 10,000 points. Most traders are just, humans in general are manic depressive. Either they're really happy or they're really sad. Like, what about just staying kind of cool? Like, okay, dude, God's gave us another day. Let's enjoy it. All right. So as a trader, you got to think like that. You got to have your mental calibration like that. And so all these guys are all or none. You understand the term all or none, right? Like, either this is going to happen or that's going to happen, and nothing in the middle. Like, okay, fine. So I don't even respond, because they just see one or two of my charts. They don't know everything else that I'm doing in the middle. And more importantly, neither do I want to be that involved in there, because I have no time or energy. And once I respond, then more comments come. Screw it, So that's what I'm saying. So this is the way I look at it. Unless we get severely overbought on the weekly, which I think will happen in this zone, okay, towards the mid-Bollinger, all that stuff, and I'm just showing one simple representation, then you're not going to get a severe pullback. And if we do get, and this pullback will be like this. So it'll be another bull flag. Look, we had a minor bull flag. That's going to break out, in my opinion. Futures have gone green right now. Globex futures, I mean. And then we're going to move up, and then we're going to drop from 3,000 maybe to 2,800. So that's another 1,600 to 2,000 points will drop real fast. Okay? But not till we reach slightly higher levels. Are you guys with me so far?
With you.
Yeah.
Exactly. And it might happen, the start and the catalyst has already happened, but it started Friday or earlier. But it's going to happen very quickly, just letting you know. This movement up here is going to happen real fast. So better have some setups, because just like, as a technical trader, I hate chasing, waking up in the morning, things are up a gazillion points. Yeah, I'll jump in on a few things, but I don't like that. I want to buy when they're doing this red candle and at the bottom of the wick. The setups, that's where the real money is made. I want to be the seller, shooting the fish in the barrel when we open up 30, 40 points higher, or during the day zoom up 700 points. Okay, I want to be a seller then. on tactical selling, moving the strikes up, whatever they may be, depending on the chart. I don't want to be a buyer, heavy buyer at that level. Then all of you should think like that. Got to buy when you want to cry on your desk. Seriously. Like some days, like, if you have a large position, something, you're totally upside down. Doesn't it feel like crap? Of course it feels like crap. Put your head down and hit the buy button. All right? Of course, looking at the charts. I'm dead serious. The days you think it's all over is the days that are the ultimate points of entry. Of course, relying on the charts. Okay? Telling you the truth. I do this for a living. I've been through it. Okay, let's move on. What are we looking at now? Now we're going to zoom down towards the daily. So let's look at the daily. And remember, as the new members who are looking at these are preset charts that I've created weeks ago, if not months ago. Okay, so one of the beauties about our service is we're not giving you things after the fact. All right, we're not giving you like, oh, look what happened. Here's the chart. Dude, we're giving you the chart weeks ago, days ago. How much more powerful can you get? It's like the market's dangling, my charts are dangling $1,000 bills saying if you do this, if you manage your position right, if you have the mental discipline and the technical discipline of setting up trades and sitting there patiently, dollar cost averaging down, and the charts are bull flags that I've been talking about, you're going to take that $1,000 bill, you're going to take more thousands of dollar bills that are hanging out there. But guess what happens with the regular RET trader, the retail emotional trader? Every time there's a little red candle, they're like running backwards, banging into trees, grabbing diapers, like God knows whatever they're doing. Okay? Sending me a DM saying, hey, what do you think here? Are we going to go higher? Like, dude, just follow the charts. And I'm with my comments and stuff. So what happens on every red candle, like happened on Tuesday when I said buy? The ultimate point to buy. And now the bull flag's broken up. Futures are up 6. And you can see that happen in front of your eyes. Look at that. And it's going to get up here towards 28.86, where it's going to hit that upper end of the level where we pulled back from. So remember, that's the problem with all traders, all human beings. They get a little whack on the head and they start right. It's fight or flight. As a trader, you want to fight the algos. You don't want to have flight, because if you have flight, in other words, you put your pants are down and you're running through, you're running away, then what's going to happen? You won't come and enter that trade and you won't get the rewards. Just think about that for a minute. Doesn't mean you have to be stupidly bullish, but this is the daily chart, my friends. Okay, look at this. This is a gaping open mouth MACD lines moving higher. There's nothing negative about it. Nothing. Now, let's take a look at the stochastic. The stochastic were dipping. They were dipping till Tuesday. I was watching very carefully. I told you guys very clearly. Don't hide my thoughts. I said it, that if we break below the 2,700 level, we could have downside towards 2,640. That's another 500 points. But we didn't. We hit that level exactly, and we went higher. And in the meantime, my bull flag broke out on Friday. So the SPY 290s are going to pay very handsomely. I told you guys to buy the May 1st SPY 290 if you want to play the indices. So what's wrong with this picture? Can somebody point out what's wrong with this picture? I'd really like to know. Like, what's negative about this picture? This is a bull flag, both sideways on a trading range right there. Okay. And as well as this, which is a consolidation. Flags can look like this. Flags can look like this sideways. These are both being represented here. And flags can look like this, which are the most bullish flags. So what's wrong with this picture from a technical standpoint? Can somebody point one? I'd just like to hear an opposing argument. What's wrong with this picture? Can anyone detect anything which is really wrong with this picture? There's your Fib 50. We are above that. So can somebody answer me, like, please? I just need a quick response so I can move on.
I don't see anything.
Okay. Anyone see anything? Because people look at things same. You know, somebody told me that well, that is your representation. I said, no, it's not. It's so frigging obvious. Now, can things change? Can we just all of a sudden drop like that? Sure, we can. We could have a virus attack in New York City, a second wave starting on Monday morning. I don't know. Well, that's a different story. I don't want that to happen. I live right around the corner. So yeah, technically there's nothing wrong, and this is where we're going. All right, this is not my representation. This is the picture right here. This is a large cup and handle. You guys know that, and I know I'm repeating it. If you draw it out, 1 second. So as a technical trader, you got to use those disciplines of dollar cost averaging, mentally disciplined to look at the markets in a very mechanical way, suppressing your emotions as much as you can, and stop freaking out just because we have intraday volatility. But that's all within the framework that I'm showing. And of course, the VIX is telling us very clearly, and I think I've said it how many times, I don't even know. I don't say it, I show it. Okay, so the first run up from March 23rd, we had a bull flag. I said that too. The bull flag was in the midst of a rising stochastic. That means a buy plus. And that's exactly what happened. Bang, 500-point day. Continuation, then sideways action, and the consolidation flag. An upper end of this consolidation is around 2,900. In the meantime, the stochastics, which was starting to slide down, I was watching it very carefully, now are starting to rise again. And we'll get overbought very shortly, so at this range. That's it. Let's move on. From a sentiment standpoint, I've said this before, I'll say it again. A majority of Wall Street analysts are bearish, other than 2 or 3. Majority are bearish. The media is bearish. The gurus who come on fast money and stuff, bearish. How many times have you heard from their mouth, we're going to double dip, we're going to retest? Sure, we can retest, but what about making money? I don't think we're going to sure retest. You know, that's garbage. But the point is, we can. But what about making money as the markets are climbing higher? They told us not to buy here. They told us not to buy here. They told us to buy here, if you noticed. Oh, now the market definitely going to go higher. Then the market went up for 3 days and pulled back. And those same guys keep on chattering away like dodo birds on TV every single day. Which is great. It's great to know what the idiots are thinking. And how do they manage billions of dollars for institutions and things? Unbelievable. I come from that background. I should know. Back on Wall Street. Their clients are either totally punch drunk or they are just don't get it. So this is where we are. And they're still telling us it's not going to go higher. It's not going to go higher. We want that to happen. We want more cash on the sidelines. We want these idiots to chase the market right at the end where we're going to sell. You got it?
Yep.
Oh, good. That's the way it is. That's the way it works. 61.8 Fibonacci level is 29.28. This is a very nice support level as long as we hold it, as long as we hold this zone here, which is quite a few hundred points down from here. You can certainly short the market if we break substantially, if we get a candle like this, but this developed over a full day. So as it's developing, you might want to put out some SPY shorts in there on an intraday basis. Don't go nuts. And you can keep a little bit overnight in between your long positions, but don't go nuts buying short positions through different vehicles till we get towards these levels. Okay, they'll kill you because the nutheads with billions of dollars either are heavily short or just sitting in cash. So they're going to get squeezed, and you don't want to be part of that squeeze factor, which means you've lost the whole short position that if you put too much money in. Okay, so just keep that in mind. All right, let's move on. Now we're going to look at the shorter term charts, this is actually a 60-minute chart, 1 hour chart going all the way back to the top of the market, 3,500. With first glance, what does it look like? I've even drawn that out. What is that?
Cup and handle.
It's a total cup and handle within a trading band. The upper end of the trading band, ladies and gentlemen, is around 2,900. Generally speaking, what does the cup and handle do?
Breaks out. Price target is from the trial all the way to the even line.
Breaks out, generally breaks out. One quick measurement back of the napkin calculation is you look at the width of this box of this. This is, by the way, a nice one. This is from April 8th. So from April 8th, we've been in a trading band. So we've been in a trading band for 3 weeks now, a trading range, right? Up and down, up and down, up and down. And I'm showing this to you guys very nicely. Let me take this out. Actually, let me leave it in there. There was a falling wedge. But just to clean it out a little bit, that was a falling wedge that broke out, so that's fine. Okay, there we go. Okay, so now I'm going to zoom in. See the cup and handle very clearly. Big cup, neckline, big neckline here, which is a 550. Multiple necklines here as it's breaking higher. So if we break out, if the width of this is 29, is 2888. What's the lower end of the width? 2695. So that's roughly 100 points, right? The depth of this trading range is 100 points. Are you guys with me so far?
Closer to 200.
Yeah, it looks like close to 200.
Oh, my apologies, 200. I'm not thinking. Oh, I gotta take this. It's just too many drawings. Okay, there we go. 200 points. So back of the napkin calculation, you know, all days, it works a lot actually. You know, you don't need to be a technical genius to figure this out. So you add the 200 to the top of you add the 200 to, and this is on a swing trade basis, to the breakout. So the breakout happens from 2888. So if we add, to be exact, so we add roughly, it's actually a little less than 200. It's more like 180, 190 something, right? So let's make it simple. Let's say 200. So from 2,900, and let's call this 2,900, 2,890. So add 200 to it. Add 200 to it, comes to roughly 3,100, right?
Yep.
200 points, exactly. This depth is 200. And this worked a lot. Works with stocks, works with indices. So add 200, guess what we get? To 3,100, somewhere around here. Now let's zoom back and see whether that is a valid inflection point on the charts. So let me do this and zoom back. And I would say it's a pretty serious inflection point, because if we go erase all drawings, let's bring it down from the top, and we're supposed to go here. I would say that's a pretty valid inflection point, because first of all it is the 78.6 Fibonacci retracement right there. Market failed here 2 times. That was a significant double top looking back, you know, in hindsight. That's also around here. So this is significant resistance. So one way or the other, there is minor resistance here at around 2987, 2990. The reasons these lines have been drawn is because these are the inflection points, supply points, where big selling came in all the way back in March. All the way back in March. This is it. This big selling came in here. That's why the market went to the upper end of this band and then retraced. Standard procedure. Big resistances. So what if we manage to break out over this? The first level of resistance will be 2987. The market will vacillate here for a couple of for maybe a day or two, and then if it does bust a move, then 3,100 is going to be a significant resistance. That's a lot points higher. You want to be a significant seller at that point, maybe short the market nicely at that point too, but hey, we'll see. So see how these things match up, right? Didn't make it complicated, just keeping it nice and simple. The AD line was significant. Look at that. That's the end of the day. No, that's 9 o'clock on the 26th. Why is this saying 9? 9, okay. Market closed at 16. Yeah, look at that. Look at these bars. There's some significant buying that happened after the market because these bars just showed up like that on the futures market. Pretty amazing. Wow, that's on the 80 line. No, this is actually showing up now. What am I saying? Today's the 26th. I'm such an idiot. Look at that. Look at the volume of futures trading right now. And this is just off investing.com. I'm not even showing you Think or Swim. See that? Look at that. That's at 6 o'clock. Sorry, that's at 9 o'clock. No, that's 8 o'clock. Globex future started at 6. Wow. Today's the 26th. Yeah, I'm losing track of dates. This is pretty impressive. Paul, you seeing this?
I'm glad you caught that, Frank. Looks great.
Yeah, this is the advanced decline line on the futures. That is pretty significant. Wow, I haven't really seen something like this in a while. Look at that. Last time we saw it was here. That was back on April 5th. And guess what happened after that? The markets went up sharply. So this is very interesting. Okay, found something, something new to look at. All right, best way to trade, and this is where we are with our zigzag volatility moves. Now, can somebody tell me? Well, I'll say it obviously. What kind of pattern this is? And I've mentioned this before. What kind of pattern is this?
Head and shoulders.
That's right. It's a head and shoulder. Thank you, Mike. That's what a head and shoulder looks like. The easiest way to remember is like flipping the birdie. Like, that's it, with a neckline. Head and shoulders generally comes down. This is the inverse head and shoulders.
Please listen. Hey, wait,
Okay.
please, wait.
Okay, can somebody mute their thing? Either somebody's getting strangled or watching a really terrible show. Okay, please don't strangle yourself. I know things are rough. So bottom line is that's a head and shoulders, HS. That's an IHS. We play IHS a lot, and we look at the head and shoulders as a parameter. These are IHSs. This is actually a very large. It's like an inverse head and shoulder. There's quite a few of them here. So bottom line is this is your right shoulder. So this right shoulder, which is at 28.46, which is only 6 points from where we are right now on the 15-minute charts, on the E-minis, if this breaks out, then we are going to go attack that 28.84, 28.87 level. See how they all match up on the short-term charts as well as the medium-term charts? Yes?
Yes.
Yeah,
Exactly.
and Frank,
But we need to break out of it. Yeah, go ahead.
I can see an inverted inverse head and shoulders there too. If you look at that second green shadow as the head, looks like an inverted head and shoulders in another perspective.
Oh, of course. That's the reason why I have that. You mean these green shaded areas that I put out there?
Yeah.
Yeah. So why? Can somebody tell me why I put these green shaded areas last week when things were really jittery and everyone was freaking out, ordering new colored diapers from Amazon? 1 second here. Let me just get the thing. Can anyone tell me what I wrote? I don't expect you to remember the exact words, but I said it quite a few times and I explained it on the webinar too. Why did I put these two green bars? What did I call them? Can someone remember? Let's see if who's that real A+ student here.
Volatility clusters.
Yes, they're known as volatility clusters. Thank you. Who said that? Paul?
Yeah.
No. Who's that? Paul?
Yeah.
Okay. Paul won't get the marks because Paul's too smart with this stuff, okay? But a lot of you new guys, you should focus on this. I called it volatility clusters. I drew big fat arrows here. It's all on my Twitter feed, okay? Go back a couple of days. And I called them a structural pattern symmetry. And I've even put the dates down, May 8th, May 9th. I'm sorry, March 8th, March 9th. Because I see these patterns. Am I going to be right 100% of the time? No. Am I going to be right 70 to 80% of the time? Yes. That means a lot of money in your pocket. This is the time when things were, Apple's down 9, Amazon's down 50. Like, all the stocks, Wayfair like down to the 7, like a gift. And then it goes up 40 points after that. Okay. So when I put big arrows here, like it's a horizontal arrow, and I said a structural pattern symmetry detected, blah, blah, blah. Some of you probably saw the same thing. Most of you didn't. But my job is to show these things. This is why we are truly contrarian when it comes to the market. Truly. Because we're not just looking at price movements. I'm showing you in this massive volatility picture that I am actually seeing a structure. And that is the structure that Paul just mentioned. A very large W pattern. I even showed you guys that. So start focusing. And what's that going to do? Nothing for me. It's going to make you richer. All right? You're going to feel richer. You're going to have more money in your pocket with small money down in playing options. And you're going to feel smart. You want to learn more. And you will finally feel good about yourself. Not just one trade you did well on, like, oh, whoopee, he told me to buy Apple, went up 3 points, I made 50% of my money. That's nothing. How about consistently making 50, 400, sometimes hitting 1,000-point runner? Showed that. But in order to do that, you got to look at these things. I'm creating it. I'm showing you in the busiest day of the craziest market. I'm still showing these things. And believe me, it takes time and energy. Sometimes I just want to shut off the service and just trade my babies. But I can't because I'm obligated to do this. So respect that, because when it gets busy, man, it gets busy. And these charts, and I got to tweak things and show you guys this, write a comment. It takes a lot. So don't have to respect me anything. Respect these babies. All right? Seriously. Nobody that puts that many fantastic, amazing real-time predictive charts. Show me another service which does that. And I'll send them high five. I don't think any service puts real-time charts the level that at a level that we do on a daily basis. And there's a lot of great services out there. But that's us. And that's why we're different. And I like it. And I'm like a robot when I'm trading. I'm doing this and I'm trading my own book. I'm trying to analyze things in my head. I'm looking at 14 screens with all kinds of funky colors and candles, trying to figure out what's happening with the VIX. And then I'm putting my stuff up there. So it's not just some whim like, okay, let's just throw out there to keep Zach busy or El Nino busy or Franco excited. Like, no. I'm putting stuff because the probability is telling me that's going to happen. Some are faster trades, some are slower trades. And this is a market which is a jungle, an automated jungle. You're trying to sell something, they won't give you that price. The bid spread is $5. I can't do anything about it. Don't text me and say, hey, why is it like that? What do I look like? I run the CBOE, Chicago Board of Options Exchange, or the Philadelphia Exchange, which are no one on the floor. The New York Stock Exchange, no one on the floor. Everything's automated. Call up and scream at Thinkorswim or any other platform that you use. Say, what the hell is going on? You know what they're going to say? Hey, that's the exchange. That's the price reporting they're doing. You're like, why? They're like, can't do anything about it. That's why it's a jungle. And that's why it's so unfair. It's very frustrating at times. Stocks are up nicely. They're showing you a bid ask. Stocks up $10. Okay, you have 1 minute to sell it. Well, take that minute. Don't sit around twiddle your thumb. Because in the second minute, the bid spread goes crazy. And if you hit the bid price to sell, you just lost money. So don't ask me about it. All right, just get used to the reality. It's not a fair market. And it's very illegal what they do. And they're doing it a lot more these days. And they're going to keep on doing it a lot more. But got nothing to do with me. All right? And this happens not a lot, but it happens on certain stocks which are not necessarily illiquid. These are heavily traded stocks. And they still have a bid price like a mile wide. Bid ask. But if you bought it a lot cheaper, you don't care. You will sell it in the middle and still make money. So when somebody asks me, how do I do it? Well, you just test it. If you want to buy 4 calls, put out 1 call and you want to buy it, see what price they bite it on. Did you guys understand what I said?
Yeah.
Okay, good job. All right. So now let's take a big fat brush and show you This is what we call a complex head and shoulder. I showed you guys that before. This is the one, and that's exactly what's going on. By the time we finish this webinar, we're going to hit 2846. Watch me. So as a futures trader, some people say we trade futures. Great, you're going to make a shitload of money trading my futures charts all day long. And we have quite a few futures traders who do it on the side. And they make home runs by the time the market opens because it's hit all these levels. And they're great. But somebody who's futures trading, well, these charts are fantastic. They literally tell you within a point or two where we're going. Take advantage of it. Make money. So that's a W. One can call this a very large W. And it's a very complex W in between head and shoulders and stuff. But generally speaking, looking at the short-term picture, this is obviously a short-term picture. It's a 15-minute chart. This is where the crazy monkeys are running around, right? Like one bar is only 15 minutes, not the longer term chart showing you the bull market's live and the weekly chart saying the worm is turning. This is like the crazy thing that is called real traders chart. So yes, overall, this still looks like, and I told you guys this, this still looks like a complex W, which pattern completion short term at 2887, which is 40 points higher from if we go to 2846. Futures are up 10 right now. Okay. Now, any quick questions? Feel free to ask, because we can go on. When this is for you guys, so
To get our friends back. Stop us back our
Not-
watch car.
Okay, please, somebody mute that. What show is that? It's like a lot of yelling, a lot of teenage girls. Like, what's going on here? Should I get worried? No, I'm just kidding. I'm sorry about that, guys. Any questions, please? No?
Frank,
Yeah, go ahead.
with the earnings, with a lot of major earnings coming out this week,
Yes.
I'm sure that has a big impact of.
A big impact, and that's what I'm getting into right now. Thank you for asking. Okay, so let's start up with the economic calendar, then the earnings. All right, we're going to point out the earnings. In my gut feeling, this is just a gut feeling based on everything that I've shown on the charts and stuff. I believe this earnings net is going to be super positive, and that we're going to see higher prices to the levels that I've already explained quite a few times as to where we're going. 2,900, 2,927 is a very viable target on the S&P 500, 400 to 500 points higher this week. Window dressing, earnings beating lowered estimates, powerful earnings. The markets go. Look, I'm a betting guy, right? So are all of you. That's why we play options or stocks. All right. My bet is the market hits 2,900 this week. So in answer to your question, you think earnings are going to draw the market down? I say no. I say higher. That's my answer. Okay. Yep. You wanted to ask me if earnings are going to basically affect. I've already explained, like everything that I explained on the chart is directly tied in with earnings, coronavirus, the Fed meeting. We're going to go look into the thing right now. But in general, what was going through your head, Alan, was, can earnings kill this reflex rally? Yes, that was your
Correct.
question, correct?
Correct.
Exactly.
Correct.
Exactly. It's not. That's my opinion. Based on everything I see on the other side, which is on the technical side, that I've explained very clearly, can't get any more clear than that, I believe that earnings will propel markets to those levels before we have a quick pullback, and then we see what happens. Earnings will, in my opinion, will be higher. Not every stock, some stocks, they're Apple, Facebook, we're going to go through that in a second. But in general answer to your question, is everyone understanding what Taka asked me?
Yes.
Exactly. So I'm just asking very directly. We're going higher to levels, not to the moon, couple of 100 points. And earnings will not derail, in my opinion, will not derail this reflex rally to the levels that I posted. In fact, they'll project it, propel it towards there. Now, what the best part is that 99% of traders out there, or whatever I say at the number 99%, analysts will be negative. And I love it. Let them be negative, because they're going to get slapped like they've been slapped repeatedly for years. And then they'll say, once it goes up to those levels when we'll be selling, they'll say, yes, short the market. In the meantime, they made no money. It's the same old story, guys. Don't you get it? It's the same old story with with retail traders, with these analysts, it's the same old crappy story. They never tell us to buy tactical lows. Who cares? I don't listen to them anyway. They never tell you to. They get excited somewhere in the higher middle, and then the market basically doesn't tank, but goes into a consolidation. Then they tell you, no, you can't buy it. We're gonna go on a double dip. Okay. Oh man, it's so boring. I can't even tell you. One day you guys will understand. Okay, it's pathetic. All right, let's move on. And the guys get paid big money for saying all these stupid things. Beautiful. Okay, so let's move on to the economic calendar. Most important, Monday, April 27. I have the date right. What's important here? Dallas Fed manufacturing surveys? Yes, important. But the Dallas Fed manufacturing survey might be lower because of what? Of course, it's going to be lower. But what would manufacturing survey also includes oil fields and stuff? So I expect it to be a bad number. Fine, market will chew it up. Big deal, as if we don't know that. Okay, Tuesday. There's nothing else here. Bill auctions and stuff important. Nothing that important to break or rip the market higher. FOMC meeting, Federal Open Market Committee meeting. Fed Chairman Powell and his team. Bingo. God bless the USA. This is very important. This is the day it begins. This is the day they announce. 2 p.m., 2:30 p.m. when he speaks. And they're going to ask him a lot of stupid questions. They're trying to, like, some of these reporters, so annoying. But he's very straightforward. He's a nerd. And hopefully he doesn't say any stupid things because he sometimes is so nerdy. He says these big words. He uses these big words. And I'm a master of understanding Fed speak, okay? Trust me. Years of listening, all the Fed governments, they speak like very proper, very, they hedge their words, what they say. So a lot of these reporters and stuff, they're like, A, B, C, D, like, okay, if you tell us to eat, we'll eat. If you tell us to go take a crap, we will take a crap. But when in the meantime, he's explaining important stuff and they'll be like, won't get it. Okay? So don't try to translate that. Well, try to learn what he's saying because he says things very clearly. They're going to try to press him and say, when are you going to stop this massive stimulus? So he's going to say, depending on market conditions stuff. And then this reporter will write, oh, he said he's going to raise rates next month because conditions will be better. Like, what a bunch of morons. And the market, the algos know very well. The smart ones will drop the market 100 points real fast, take some of you guys out of your positions, boom, and then take you higher. Now, if the market runs up big time into Wednesday, of course you're going to be a tactical seller. If it hits my levels, that's the way we operate. All right? But even even some of these big shots on TV, they don't even understand what Fed Powell is trying to say. What's it going to say? Is he going to talk like a moron? No. He's going to talk proper because most of us we don't even speak proper English. Our boy Donald doesn't even speak proper English. We know that, right? And he's from New York. Oh, don't wonder. All right. So it's all like gibberish. That's what politicians do. They talk gibberish. Well, Fed Chairman Powell is not a politician. He's a really educated, smart individual. He can never be a politician. So sometimes they misinterpret it, and the market basically goes into a tizzy and then corrects itself and goes higher. All right? So just be ready for that. So that's why I say he shouldn't say anything that nerdy that throws everybody out the thing. So I'll try to explain it as much as possible on Fed Day. All right. Which is our next webinar anyway. The FOMC meeting begins. International trade in goods important. Yes, we certainly want to know. Retail inventory is important. And inventories are obviously piling up because unsold goods on retail stores. But online retail, what it's all about. They should have a section here saying online retail inventories. They actually do have subsectors on the online side. Case-Shiller index, housing, yeah, it's going to be weak. And Case-Shiller, this another idiot, Shiller with his great Shiller index, right? It's very cheap, like they say, there are a lot of educated derelicts in the world, and we're all educated, right? But real educated derelicts in the world, who said that? Oscar Wilde? You know what that means? They're like some people just so brainy, like they're so much into analysis, they're into paralysis. They don't do anything. So Case-Shiller is another one of them. I'm dead serious. You listen to him, you listen to the Shiller index and all this stuff. He's telling us we're going to go into a depression. Come on, dude, just go away. But he's prominent. He's a prominent guy. Like, don't tell me like we already know. Case-Shiller index will show maybe -10, like, oh, wow, everybody's just burning in their houses, like, stupid, boring. So I don't give a crap about that index, okay? Give it to me as bad as possible. So I can buy the crap out of the market as much as I can. Case-Shiller index. Consumer confidence, very important. This is the one I worry about. Why? We want to see how much dented consumer confidence is. I have no comment on this. I don't know. Consumer confidence numbers came out this week, the preliminary ones. They weren't actually that bad. They weren't
Those
actually that
stimulus
bad.
checks should help.
Huh?
Those stimulus checks should help a bit.
I hope they all, blow it on Amazon and Shopify and Wayfair. Not on booze. Seriously,
iPhone.
because that's, I hope they don't blow it on booze. Come on, that's like stupid. Buy something that you can enjoy that doesn't give you a hangover the next day. Not that I don't like drinking here and there, but seriously, less hangover. Buy something nice. Go buy an Apple iPhone. Buy the new one. Order the new one. Let's get it up there, guys. All right. Consumer confidence, very important. We don't want this to tank. We'll have an immediate dip in the market, then the market will pick up. Richmond Fed manufacturing, important. Okay, this is the most important part. What is the Fed going to say? What are they going to do? They've already done everything. I don't know what they're talking about. So GDP number, whoa, didn't see that, 8:30. So Wednesday's a big day. All right, GDP number, gross domestic product, going to be fugly, real ugly. Give me a GDP number like -5%. Already know that. Don't we know the GDP number is going to be bad? Yeah, we do. So I don't particularly want a really crashy GDP number, but they're already warning us it's going to be really bad. Short term, it's in the back rear view mirror. In my opinion, things are going to get better going forward, barring a second wave of massive virus attacks. And pending, yeah, go ahead.
I think as long as other countries have worse GDPs, it'll be okay.
Yeah, but you're right. You're right. German GDP wasn't that bad, by the way. And some other GDPs that came out. China's GDP isn't that bad. And this virus thing started there. So tell me about it. It's where it started. I mean, they were the ones who went through hell initially. And their GDP wasn't that bad. The Chinese are still shopping. Starbucks stores have opened up. Apple stores have opened up. Look, they're a tough race, and they love spending. We're like softies. Canadians, Americans, we're like a bunch of real softies. Always like, oh, it hurts, mommy. Okay, but we love spending. But we like cry on everything. The rest of the world's a lot tougher than us as people. Trust me, we are. Look at us. We get like not just the virus thing, we get something else happens. Like, oh my God, this is terrible. And that reflects all over the stock market. Bunch of these, majority of the Wall Street analysts, majority of traders, investors, all a bunch of softies. Like, oh, this really is bad. I always thought that the whole market, like I've been doing this for a while now, and I saw how to deal with institutional clients, high net worth retail clients. They're all a bunch of softies. They're always so negative on the United States. Like, you don't need it like enemies. We are all our own enemies. No, I don't want to buy a stock. Look at them. You go to somebody and say, did you buy any stocks over the last month? Oh, no. You crazy? Like, okay. What morons. Think about it for a minute. Market goes down 300 points. Oh, this really hurts. My P&L's down a little bit. Should I sell everything? Softy. Like, come on, man. Seriously. Okay? Think about it. It's true. The rest of the world, they like come out and say, fine. My wife told me today that Sweden didn't even lock down. Is that correct? They said, fine. The way, and Sweden is, of course, a much smaller country, but really smart people. Great products. So the Sweden said, hey, listen, coronavirus, fine. Let it go through. I don't know, it's pretty controversial. It's going to stream through the thing and just let it run through. We're not going to stop anything. Of course, we're going to have some social distancing and all that. And apparently, Swedish deaths are pretty minimal. Japan did some right things. Japanese deaths are very minimal. And us, we're like, oh my God, this is terrible. We're going to all die. Is this week going to be the end of the US stock markets? This is what we think. So sad. It's always been like this, by the way. We are a bunch of softies. Tell yourself that. That's how you become strong. Got it?
Yep.
That's your little Anthony Robbins mental calibration. Very important in trading, guys. Very important in trading. So this is the most important day. Then Thursday comes, end of April. Okay, we finished the first quarter. This is the beginning of the first quarter. So this is the first month, end of the first month. Jobless claims. It's going to be bad, obviously. Personal income and outlays. Not going to be good. Employment cost index, very important. The ECI. You know, that's going to be kind of weak. Chicago PMI. It might surprise people because we have all lowered forecasted consensus right now. So as long as they beat that, it's going to be fine. Or if it's not worse than, way worse than that, it's going to be fine. Then comes Friday, May 1st, Labor Day, right? PMI manufacturing index, important. All of them are going to be weak, but as long as they're less weaker than the consensus, we're going to be fine. ISM manufacturing index, of course, that's going to be weak. You know, factory shut down and this and that, but I think it's going to be better than the consensus. Construction spending, construction spending is going to be doozy, but as long as it's higher than the lowered numbers, we're going to be fine. Baker says rig count, well, screw that, it doesn't matter. So bottom line is, this is the most important day. Now I'll tell you what might happen. We're going to zigzag our way and rally into Wednesday. I'm going to be a tactical seller if we are up into Wednesday towards the levels that I talked about, 2887, 2900. Okay? I'm going to be a seller before the Fed meeting. I'm going to, and of course, seller doesn't mean I'm going to sell lock, stock, and barrel everything, but I'm going to raise cash. I always have enough cash on the side, but I'm going to take tactical profits. And as the market climbs higher, futures are up 10 right now, towards the levels that I explained to you guys very clearly. Can't get any more clear than that, okay? So then this is called a three-wave move. This is what happens during Fed day, because they're always misinterpreting what they're saying. And the algos are purposely doing it to blow you guys all out of the water, okay? So they can take all your cheap calls away from you. Trust me, I know. So three-wave move. Generally, wave one, whatever it is, up or down, is equal to wave three, generally speaking, okay? Wave one, that means wave one in the market, like up or down. So let's say, for example, right after the Fed, it's always a big move, right? So wave three, there are three waves, remember, three waves. So let's say the Fed, I'm just giving you a small example. Let's say the market shoots up right at 2 o'clock, the Fed announces. What is the Fed going to announce? You know, they've already announced everything. What are they going to say? We're going to take rates down to minus 10%, like you should be paying the bank 10% to put money in the bank. I mean, come on. I don't know what they expect him to say. He shouldn't even have this frigging Fed meeting. They've done so much, billions and trillions of dollars in stimulus. I mean, come on. You know, now it's the government who are doing things, and they're going to be doing more things. It's up to the government now. No more monetary policy, no more Fed. They've done their best. They've provided the ultimate safety cushion well before our politicians, bickering politicians, put out the stimulus bill and all that stuff. And the second one, all right, Fed has done everything. Now it's fiscal policy from the government that's needed. Let's put out an infrastructure bill out there, big one. Let's fix our rotting airports, our rotting roads, our bridges. Let's put people back to work. That's what the next thing should be. But then they're all fighting like cats and dogs, as usual. So bottom line is, the wave one goes higher. Wave two will be a immediate consolidation. Wave three generally follows the direction of wave one. Just check and see if it works. Generally, it works. So you're going to see very fast reactions. Don't try to trade those. I'm telling you. And we'll try to trade them. Why not? If you have time and you're fast enough, you're like very robotic, yeah, you can trade these waves. It's going to be very fast, like minutes. Okay, that's the way it works. So that's all for next week. Now, the next thing we're going to look at is any questions on this? Because I've explained this very seriously. Like, this is probably the best explanation you've heard on what the week is going to pan out, at least on the economic front. Any other quick questions?
May 1st is Friday, Frank, so that's a technical important date on the monthly chart.
Technical important date in the monthly chart. I mean, you have a comment, like why it is?
Yeah, it just sets the tone for the month of May on Friday, so it'll be interesting to see, where that
Yeah,
monthly
well,
candle is going to open.
Yeah, generally speaking, that's fine and good, but given these type of days, that doesn't, I don't think that applies that much, but it's important because the first 5 trading days of a month are when pension funds are generally mandated to put money in the new money in the market. Okay, so the 5 trading days of the month would be May 1st, which is Friday. 4th is the second trading day. 5th, 6th, 7th, fourth to second, third, fourth, fifth, sixth. So basically, till May 8th to May 11th, you generally have a influx of billions of dollars from the massive pension funds entering the market, and that sets the tone for that depending on how much they put in, that sets the tone for generally for the month of May. Do you understand what I'm saying? So the first
Yep.
5 trading days, generally speaking, are the days that the new pension funds, the pension funds, not new pension funds, whether it's CalPERS, the largest one in America, California pension fund, and then you have TIA Craft, like you have all these big ones. New York State Pension Fund, these guys, pension fund managers, allocate money into the market. So they generally put money into the market, the first part of the thing. So selectively, they'll buy the market, this and that. And they have been entering the market, as you know, here and there. That's why you got this 700, 800,000 point pop sometimes. They're entering the market, and they enter the market at some very nice cheap levels. So they're actually not being wusses and softies like the rest of the other crowd. They're picking stocks. So all right. So yeah, that's why the first 5 days in May should give us an indication for the tone of the month of May, but it doesn't guarantee anything in this day and age. But just letting you know. Okay, next one is we're going to look at. We can highlight some earnings. Very, very critical. Very critical. Going to be real choppy. Can't tell you which were the other, but have a bullish bias on Facebook, Apple, and these type of companies, and those charts have been put out there, so feel free to consult them. Earnings are always a 50-50. That's what traders, speculators do. They bet on stocks. I repeat again, you want to know like exactly what a stock is going to do, then don't be a trader. You pay a very high price for certainty. Warren Buffett. You want to know, you want to buy the stock right at the high after it's gone, good luck. Go ahead and do it. Be my pleasure. All right. We like to buy it when it's cheap and ugly within technical buying points. Most people can't wrap their heads around that, but that's okay. I don't blame them. Okay, this week. Can everyone see the screen?
Yes.
Okay. And I warn you, this week will scare you. Okay, so be ready. And if you think that any week doesn't scare you and it's all a walk in the park, well, good luck. All right, this week will scare you guys. So use that fear as positive energy instead of completely capitulating. All right, before the open, I'm just highlighting if in the checkpoint. It's one. We didn't set up the before the open ones on Friday. I was too tired. This one, this will give us an idea. Sohu's a nice internet company, Chinese. So this one's obviously, gives us an indication. United Micro, old-fashioned name. Also, it will give us an indication on the computer side. But this is where the fun starts. So that's before the open. So we can't do anything about it because we don't have any positions before the open. After the close, lots of earnings. This is the busiest week of earnings. It drives me nuts because there's so many. Okay, get this out, get this in. Okay, so let's look at, I'll be highlighting the basket, the usual stuff. But let's look at the big ones. Lots of companies. Holy Lord. Semiconductor, Sanmina. I'm just highlighting the ones that I'll be looking at. Who's JJ Snack Foods? Might take a look at that. People have been eating a lot of junk foods during the stay at home. Okay, CRISPR, these are long-term biotech plays. F5 Networks, interesting one to look at. I know this company well. Look through it and throw out anything. This is an interesting one, biotelemetry. Beat. Amcor, semiconductor play, we'll be looking at it. So nothing that exciting after the close on Monday, but not too bad. Not too bad, okay? So, yeah, nothing there. Let's move on. I think the fun starts on Tuesday, right, with Apple? Or Apple is Thursday.
Apple is Thursday.
Apple is Thursday, that's what I thought. Okay, so let's try to clean this out and get the pen. 3M, love to play that one. Industrial play. Caterpillar, calls are generally cheap, good one to play. Centene, health insurance company, nice one to play. CNC, industrial company. Floor, Harley Davidson, don't give a crap about that right now. Let me see here. Nucor, don't give a crap about that right now. Pfizer could go up a buck or two. Pepsi, I don't know. What do you call Shutterstock? I haven't seen the stock in a while. Rockwell Automation, certainly from the industrial aeronautical side, one to look at. Martin Marietta, one of my favorites. These things move. They move $6, $7, $8, $9. So I'll definitely take a look at that and look at the charts and all that. So this one's good. That's before the open on Tuesday. Polaris Industries, they make things, right? What am I? I'm having a dumb moment. They make what do you call the caravans? The
Snowmobiles, exercise equipment.
Yeah, no, they make snowmobiles. Then they also make. It doesn't Polaris also just snowmobiles and what else? Don't they make like?
Nordic track shit.
Oh yeah, okay. So this one should be an interesting play. Should be an interesting play. I'll definitely take a look at it. I played it once or twice on earnings years ago. I think a year ago and stuff, and the stock worked very well. Wow, look at the number of companies. So what else is coming up here? I don't want to highlight. Anyway, don't go by this and write down like, okay, he highlighted this one. But I would say I'll be looking at, Xerox, forget it. Southwest Air should be an
UPS
interesting.
looks interesting.
Yeah, where is UPS? You see it? Oh, there it is. Yeah, UPS, FedEx, definitely take a good look at it, because those things have a lot of juice to move up a couple of points. Ground shipments are moving higher. Economy reopens a little bit more, it's going to boom. So that should be very interesting. So I don't want to keep on going through this. I won't even bother highlighting because it takes too much time. I'm just going to move the arrow over it if you guys don't mind, because we're only on Wednesday right now. During market hours, that's interesting. So this is Tuesday.
Right.
This is
AMD.
Tuesday. Yeah, definitely play AMD. We look at the chart. Never know. AMD's moved up a lot, but looking at the chart, the stock's good for 59, 60
But
bucks.
then you had all these people staying at home and then doing gamings.
Absolutely. Not just gaming. They're into some heavy duty stuff. Their numbers are not that bad. The China production hasn't been impacted that much. So there's a lot of positives in AMD. That's why the stock's at 56, 59. Otherwise it'd be a $30 stock. AMD certainly a play. Akamai is definitely a worth the play, even though I don't like trading their stocks too much. Alphabet, very interesting. Let's see what happens. So this is a big day. This is a big day.
There's Starbucks there too.
Yeah, look at that. I'm just scrolling down here. And when we are playing earnings, I like to play the ones with large IV, implied volatility. In other words, like to see them move $5, $10, $15. So the higher price stocks then generally tend to have a plus minus 30. So those are the ones really to play because you want to make money on big moves. You can't be making money on $1, $2 moves. Yeah, you can, but it doesn't do much, Yeah, the calls will be really cheap, maybe $1.20. I mean, sometimes like maybe 70, 80 cents, but then where do they go to? Like $1.20? Unless you buy a lot, you don't make any money. So I like playing the big wide ones. Lattice Semiconductor, definitely take a look at that. iRobot might be very
Great, great.
interesting because everything is contactless. So this is a very interesting play, iRobot. Yeah, go ahead.
Yeah, I see you do pairs when you do those earning calls out. So should we be taking them in pairs?
No, I don't do pairs all the time. I do pairs on the ones which are I'm a little bit doubtful about, and the ones which have a possible thing. You know, you can do a straddle. You can buy. You can you can do different type of spreads. You can sell a put. You can buy a call, or you can simply buy a call and a put. You buy the call for the current week, and you buy a put for the current week, because the reaction on the negative side is generally immediate, and then you can buy a call for next week, because the stock might fall and then rise very nicely. Look at Netflix. Netflix fell hard and then rallied like 25 points. Okay, so so yeah, you can certainly do that. I don't necessarily, just for newer members, get into the whole option strategy too much, because then it becomes a little bit too much for me, okay, to handle. That's up to you guys how you want to set it up. I'm just suggesting the directional bias and a simple straddle if you have any doubts on which way to play. And sometimes what the machines will do, they will leave the stock kind of unchanged, and you get killed on both sides if you have the near term calls. Okay, so let's say you buy something on Thursday and you're thinking it's going to move $30. Hold on one second. To move $30 on Friday, instead it goes up 5, it kills you on both sides. They do that a lot. Okay, they look at the positioning and then they'll just suppress the stock down, and you're like, oh my God, I didn't make money on the calls or the puts, and everything expires worthless. Okay, so yeah, so there's a lot of companies, coming up, and then comes just highlight the big ones. Wednesday, Anthem, my baby. Definitely play that. Definitely play that. That stock can zoom up like $30. Like, it's still doing it too. It's a beautiful company, Anthem Health. Love it. Look at the chart. Power. So Anthem Health, UNH, United Healthcare, this three musketeers can make you rich. I know some traders, some of my members, who just trade these three and like two others here and there. That's it. That's all they do. They trade it back and forth. They generally don't short it that much. They buy the tactical dips. They love it. And one guy made so much money on Anthem, it's sick. I said, can I put your feedback out? He goes, no. I said, okay. God bless you. So, that's another way to specialize. So here, Boeing. Wow, Boeing. This is Wednesday before the open. Boeing. Boeing's number, everything's going to be terrible. But question is, if they're a little bit better than expected, the stock will jump up $10 and take it market higher. But given what I think, if we run up into Wednesday, Boeing's going to have a crappier than expected number, and the markets will fall. Remember, Wednesday is hump day. Hump day means that there's a lot of options adjustment that goes on Wednesday. So if we run up into Wednesday, 9 out of 10 times, Wednesday is a red day. Telling you right now. Okay, people who've been with me, they know that Wednesday is a red day if we run up into Wednesday. So I would be careful. Carnival Corp, interesting play, shipping. So much bad news, yet the stock has bounced. General Electric, I don't care about it right now. Humana, yeah. So this is a beautiful day. See, Humana and Anthem, who cares? Like, I'm gonna buy calls on them. These are beautiful companies. MasterCard, I think the stock goes higher. Let me see here. Spotify, haven't played that in a while. I'll certainly take a look at that. This will be a very interesting day. Yum Brands, very interesting. They own a lot of restaurants, so in China and here. So this one would be a nice play. Let's see, after the close. Ooh. Where's Apple? I'm looking for the big names. That's Wednesday. Wednesday. Look at the number of companies coming out. ServiceNow, I'll definitely be long on this stock. Definitely.
Welcome.
Teladoc, one can play a straddle because the stock has moved up quite a bit. But they did say their numbers are strong. They did pre-announce. You remember the day they pre-announced last week and the stock jumped like $15. So another thing to keep in mind in Teladoc is has a very small float, something like 70 to 80 million shares or something stupid like that. I have to check. That's what I read. So you know what happens with small floats? They get squeezed, and more people buy. It's like the stock goes nuts. So ServiceNow, I like. Teladoc, always like this company. That's the new frontier. And Tesla. Tesla is another crazy one. Its options are super expensive. I'll buy this 800 calls and just throw it in there. Just let it go. Forget the straddle strangle. Just freaking. Or you can do it. I mean,
Hey,
I'll
Frank.
look at the charts. Don't matter because the stock will be like wild. Yeah, I think it goes higher. Yeah, go ahead.
I heard today that Tesla is very close to being eligible for the S&P 500 if it has good profits.
Wow. See, you just heard some great news. Can you imagine? Tesla's valuation does determine it should be one of the, you know, they should have a new something term instead of the FANG, the stupid just FANG. They should have like Tang or something. I don't know. Tesla should be up there. Yeah, I wouldn't be surprised. Tesla's validated itself. Every hater in the world said Tesla, oh, it's $100 stock. If you drive the car, it only goes backwards, like all this stupid stuff. And then you have the real haters like the old guy from GM, Lutz, right? That's his Lutz. He called Elon Musk a criminal and a scam artist. Like horrible stuff. Like, like, dude, because you're retired and you're old and people respect you and you ran GM or Chrysler back in the 900, the 1800s. I'm just kidding. You're like calling Elon Musk a complete scam artist. The company's going to go bankrupt. I don't imagine how these guys get away with this stuff on national TV last year. And the stock
Even if
was, and the
even if
stock
it's a
was a
scam
lot
artist,
cheaper.
he's a genius.
Huh?
Even if he's a scam artist, he's a genius for what he's doing.
But why is he a scam artist? That's
He's
like the
not.
stupid, exactly. So when you say even it's a scam artist, that means that you're implying it's a scam artist. He's a freaking genius, And
I think the short,
and it's the shorts love propagating stuff. Like, what scam did he ever do? The guy has shitloads of money, and he doesn't even like do anything other than like sleep on the factory floor building cars, and they're calling him a scam artist. And somebody, and don't take me the wrong way, Zach. And Zach says even if he's a scam artist, what do you mean even he's a scam artist? These are the people who make America great. Not again, just make
Yeah,
America great, period. Like, he's not a scam
correct.
artist. He just wants to build. You think cars are his real business? I've always said, the one day he just says, listen, I'm going to spin off and take IPO, SpaceX. You know what Tesla stock's going to do? It's going to go up $300. And people are going to say, oh, he's a scam artist. Come on. It's so stupid. SpaceX is the most profitable company ever. They raise money, like they put out a little memorandum saying, hey, I want to raise 200 million. They get it in 3 seconds. SpaceX is unbelievable what they do. You guys should know that. So he's got SpaceX.
Yeah.
He's got the battery division. Okay, the EV battery division.
artificial
And
AI.
and he's got the AI stuff. But I'm telling you the real like meat. You got the SpaceX, got the battery division he can spin off. And he can leave the car division as a money-losing venture just for sales. Do you know what he's going to do for this stock? That stock will go to $1,000. And I want more people to call him a scam artist, including the old farts, for GM and stuff. Oh, they don't know how to build cars. Like, I don't even like a Tesla, but it doesn't matter. Stock's going higher because he's a scam artist. I'm just kidding. All right. Tesla, I like.
Qualcomm?
Okay. So even if it comes down, yep, Qualcomm 5G play, I would certainly be into it. Qualcomm did say some good things 2 weeks ago. They said that China business was unaffected. Of course. You think the Chinese government stupid? Yeah, they can lie all they want about the coronavirus stuff because they didn't want, to have the whole country implode. But 5G is far ahead of us in China. This Huawei that we banned is so far ahead in 5G technology, it makes us look like, hello? So Qualcomm's the only defense that we have for them, like to fight the 5G war. Remember, 5G is the next frontier, and China and Asia is way ahead of us. And we're sitting here twiddling on our phones looking at 4G. Think, guys, think. We don't need Huawei. We have our Qualcomms, we have our Nvidias, we have our Broadcoms, and we have our Apples. Any of you, I'm telling you right now, use Samsung phones, and people hear me and they say, oh, here he goes again. Burn the Samsungs, okay? Buy an iPhone. You want to support America? You want to support the country you live in and you love? Buy an iPhone. Why the heck are you using a Samsung for? Yeah, great screens and stuff, but what kind? It's an Android phone, isn't it? Like, come into the community, come into the Apple universe. What are you using a Samsung for? Garbage. Buy an iPhone. And I want iPhones to come up with bigger and brighter and more beautiful screens. Buy an iPhone, guys, all right? Support America, seriously. Drop your Samsungs right now, today. What's so great about a Samsung phone? That it takes a clearer picture than Apple? No, it doesn't. And more importantly, what apps do you get in Samsung? All Android apps, right? Right?
Right.
Yeah, so exciting. Yawn, boring. Let's move on. Who wants an Android app? Like, seriously. Yeah, seriously. Get your nice, beautiful Samsung phone, return it, and get the new iPhone. Get an XX Max and then move up to the new iPhone, new ones that are coming up. Seriously. Do it. Do it. That's how you know. And make money on Apple stock in the meantime. All right. So busy day. Thursday opens up, and we are going through lots of companies. Should be interesting. Kraft Heinz, Kellogg. Did you eat more cereals during stay at home? I don't know. A lot of sugar in your body. Great stuff. McDonald's, definitely. Very interesting play. I think does well. Molson Coors would be interesting. Now, the algos can drop the stock very hard after hours, first part of the morning, and then run it up. So just be aware of that. You know, it's like, it's something you just have to get used to. So after the close, Apple. Where's Apple? There. After the close is Apple. I have no comments on that. I have the charts there. I think it can move up there. It looks good. I'm overall bullish. It's fine, but you can do a straddle on it. And even if Apple falls,
But
it's not. Let's just so you know, guys. Okay. Even if Apple falls, it's not going to stay there for too long. So if you don't want to play the earnings, buy it the next day. Problem is, if it's up $7 the next day, you buy it and then it goes down 3, you're like looking like an idiot, right? So best case scenario would be you don't do anything and the stock drops $7, buy it there. One with the other, the big boys are going to buy Apple. Just one with the other. Unless Apple says no more 5G phones, we're closing all our stores in China. See you later. In that case, Apple will drop $20. The market cracks. We'll be down 2,000 points. Of course, they're not going to say that. And Tim Cook is, best buddies with Donald. I love it. The way he handles Donald. And it's it. He's going to do a lot of great things. Team, I like. Baidu, I like. I keep on buying the cheap calls. So this is like really for speculators. Amazon, yeah. What are you going to say? Everyone thinks the stock. Most analysts think the stock's going to go higher. So that's the problem. What if it misses the thing by thing? It'll be down at 150 points in like 1 second. Everybody
we got
thinks
eBay's on Wednesday, so that'll be interesting.
I don't normally play eBay, but eBay's a great marketplace play, right? On that stuff. So yeah, you're right. You can play eBay too. But eBay, for some reason, is not that well liked on Wall Street. So they don't really push it that hard.
Well, I'm looking at it more for like a glimpse into Amazon, a preview for Amazon.
Oh, okay. Not really. Not really.
Amazon's into so much stuff like cloud and
Amazon.
retail.
Okay, let me just put it this way. I'm going to wrap this up. Amazon doesn't give two shits about eBay. Okay, Amazon doesn't give two craps about Wayfair. Amazon doesn't give two hoots about Shopify. Amazon just cares about themselves, and the stock is a monster. Okay, Amazon cares nothing about eBay. eBay will tell you nothing about what the sales are on Amazon. Amazon literally supported the U.S. through this whole coronavirus crisis. So the question is that what's their guidance and how is AWS doing, Amazon Web Services? But when it comes to comparisons, like, oh, will it give us a hint on this? Absolutely not. So that's my opinion. So Friday comes around and a whole bunch of companies, and that's about it. So guys, it is 10. Wow, it's 11 o'clock. So we're doing this for 2 hours. Oh my God. All right, guys, listen. Fantastic stuff. Covered a lot of great information. Let's stay solid. It's going to be volatile. It's going to be, I don't think it's going to be, I'll say one thing. I do not think, and let's look at the futures before we finish. Oh, we're almost there. Almost there. Let's take a look at our favorite fib. Ah, looking good. Looking good. Futures are up about 7. It's not. I don't think it's going to be a painful week. I don't think so. I think the pain hits us towards the second week of May. And I don't think the pain's going to hit us because we already know what levels we're going to basically move away from the markets or short the market and do stuff. And that's going to be at this level. So we have already explained that. I don't need anything more to explain. And so aside from that, here's your E-minis. I am really liking this chart. How could you not like this chart? One of my dogs is like, what the hell's going on? Why are you still doing your webinar? I need to go take a walk, you know? And he's just serious. He's looking at me like, what's wrong with you? I said, dude, I just turned my head. And one of the doggies is just looking at me like, what's wrong with you, man? You should finish this in an hour. What are you doing? It's like, okay, sorry, man. No, seriously, dogs are very smart. It's like, cut it out. I need to do my job. So yeah, so look at this. It's literally, technically, it's beautiful. It's a cup and handle. And upper end of this handle and the neckline is 2887. That's 50 points, or 2900. That's almost 70 points. That's 500 points from here. What's wrong with this chart? Nothing. Nothing. Nothing's wrong with this chart. What I like to see is this yellow line, which is the 5-day moving average, start to really curve higher. That supports any pullback. Here, all we did was retest. We retested the downtrend line, and now we're creating a nice green candle, and that green candle should carry us up. And if it drops us, we know where it can drop us. This is the 50-day moving average. The 50-day moving average is 2787, and we need to see this 50-day moving average do what, guys? We need this 50-day moving average to do what?
Go up.
Turn up. Exactly. We need to turn up, not go up, turn up like this. It's going like straight down. We need it to turn up. This yellow line is the 5-day moving average. It's starting to turn up. We can see that. We need this 50-day to turn up. And in order for it to turn up, we need a big push towards here called a breadth thrust. Big 400-point day, 500-point day. And the 50-day moving average is nothing but a compilation of prices over the last 50 days, right? So that will start to turn up. Once it starts to turn up, then we have validation that we can move higher. Sometimes it's that simple. Have a blessed evening, guys. Let's start the week on a strong note. And let's try to be flexible. That's all. Look forward to seeing you guys all next week. God bless you. Keep out the referrals. Dave, right? Dave Crowley, who joined us. Dave, welcome. Just to make it happen. Covered a lot of good stuff, man. Straight talk, facts, not fiction, not the garbage you hear out there. Because most of the time, you hear garbage out there. I don't care what trading service it is. I'm not bad-mouthing anyone, but honestly, think different. Stop thinking the consensus and stop being scared all the time. Good night.
Night.